Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, March 28th, 5:23 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. A little bit of a late start tonight. I just finished being a guest on a podcast, Magnet Minutes, with Jordan Kimmel of Value Engine Capital. That should be released within the next 2 days, and we'll make sure we get a um, a link out when that's available. Basically, we just talked a little bit about how we manage money here at Revere, just and how we arrived at where we are at Revere. And Jordan's a great guy. Enjoy speaking with him, and we look forward to that being released. So let's dive into it here. State of the market: we're in a correction. Tech rally. Tech's been outperforming, not so much this week as we're rotating within the S&P 500 money coming out of tech into some of the defensive and cyclical sectors. You can see over here on the trend gauge, market leaders neutral with a positive bias. Short term, all five of the major indexes, well, we've got three of them below the 21-day moving average. S&P second close above, but it's a lower close. We don't really count that. We want to see strength. NASDAQ 100 firmly above the 21-day. So we're seeing some signs of strength, but we need that needs to get that needs to broaden out. Medium term, under the 50-day moving average, four of the five indexes are, NASDAQ 100 being the exception. And long-term 200-day moving average, we've got the S&P and the NASDAQ above it. The Dow poked its head above it yesterday. Did it stay there? We'll take a look at the charts momentarily and see. And if you've been paying attention, we know that mid caps and small caps continue to lag. So what happened today? Second straight day of a tight coiling action. The market is gearing up for a move. The market can only do one of three things. It can either trend higher, trend lower, or consolidate, base, coil, whatever you want to call it. Consolidate, waiting for one of those moves either up or down. And that's where we are right now. We don't predict what direction it's going to be. We know we've got leadership in place, and we know that we've got a lot of headwinds macro for the market, including the banking crisis, which at least doesn't seem to be getting any worse for the time being. So we got that going for us. Here are the numbers on the day. Our RG7, that's the Revere Growth 7 ETF composite, down 0.44%. S&P gapped down 0.2%, worked its way a little higher, worked its way a lot lower. Nice close, closing the loss to only 0.16%. NASDAQ 100 lagging again, down 0.5%. Dow down 0.15, mid caps leading up 0.33%. Russell basically flat, just down by less than 0.1%. Global diversified 60/40 stock and bond slightly positive. Foreign stocks outperformed U.S. stocks today, and in-house GROTECTION down approximately 0.29%. We'll get to the tail of the tape and charts of interest. First, we go through the indexes as we do every night here at Revere. Five major indexes, and then what are leading stocks doing? Those are the questions that we want to ask ourselves. And what are the indexes doing across three time frames? This is how we determine how much money we're putting to work for clients here at Revere. You've got your green line, that's the 21-day moving average. We've been playing ping pong above and below that line over the last week and a half. You got your red line, that's the intermediate term 50-day moving average. That's been acting as resistance as the S&P tries to get above it. And then you've got your black line, the long-term 200-day moving average. This plays a critical role in our process. This is what keeps us out of harm's way and away from bear markets. All of these bear markets that I'm showing on this graphic occur underneath the 200-day moving average. We got out of the way when we broke the 200 during the COVID pandemic sell-off. We got out of the way last year when we broke below the 200-day moving average on the way to a 27.5% loss for the S&P 500 last year. And we kind of got out of the way when we dip back above it here, or get back in when we get back above it the way we did in January. But then this banking crisis sent us back below. A bunch of our stops were hit. but we're re-engaging as leading stocks really didn't break down. It was financials, it was utilities, it was a lot of interest rate sensitive stocks that got hit hard. Tech held up great. Tech is rotating a little bit out of it, a little bit out of tech over the last 2 days. We'll take a look at some charts and show that momentarily, but uh, two straight tight days. Let's go to a 60-minute chart here. You can see both of them within uh, this range of last week where we had the FOMC meeting, initially tried to break out, then tried to break down, then a gap up the next day. We tried to break down again with Janet Yellen making some comments about banks. Then we tried to rally on Friday and we pulled back again to this look at this 3950 area. When I set these crosshairs up, you can see how it's been a major support and resistance area going all the way back to late February. And then on the high side, we've got 4,000 as resistance, and that's where we've played ball the last 2 days on the S&P 500 between 3950 and 4,000. Let's go back to the daily and back to the NASDAQ 100 2-day pullback, although kind of a hammer today. So we failed to break out last week. We failed to break out again. That was Wednesday. We failed it again on Thursday. Friday was a kind of a tight day. Tried to move higher yesterday, failed, closed at the low of the range. Tried to break down below the ADMA today, but closed right on it and didn't even touch the 21 day. Continued strength, lower volume on the NASDAQ 100 pullback today. Nothing wrong with this. Let's look at the SOX real quick. SOX has pulled back more severely over the last 3 days after that 2-day failed breakout. But beautiful bounce today off the 50-day moving average, closing right above the 21-day. We've got a great reference point for semiconductors right now. They should not break today through today's low. We still have our NVIDIA and AMD positions in-house. Let's go to the Dow Jones Industrial Average. You can see we broke above the 200-day yesterday, but couldn't get above the declining 21. Same situation today, another tight range. Undercut but reclaimed the 200, got above but failed and closed below the 21. Very tight. Again, coiling for a move there is the Dow Jones Industrial Average. Let's go to MDY, the mid caps. Another 2 days, again, tight range off the lows. Friday's looking like a shakeout for now. That's a critical low. Need to get back above the 200-day moving average right now. We've basically been range bound for the last 2.5 weeks, uh, hoping that this banking crisis can reconcile itself. Let's go to small caps here. Same thing with the shakeout last Friday. 2 tight days since then, closing right on the ADMA, below the 50, below the 21, below the 200. This is where most of these small banks are that have been getting hit hard. Let's go to KRE, regional banks. Can't muster any strength. Tight range day, the tightest in 3 weeks, frankly. So a little bit of hope there for the financial bulls. We want to get above last week's high, and we really want to get above that 21-day moving average, but we're still 10% below it. Let's go to KBE, bigger banks, not as bad. Again, tight day right on the ADMA. This one is 8% below the 21. Let's shift gears now and go to some inner asset correlation indexes. We'll start off with the dollar. Dollar down today. At the low, near the lows that we had last week in the dollar. So dollar down. Can you predict what's happened with precious metals? We'll take a look at those in a minute. Let's go to the VIX. VIX closed below 20. So this big spike, panic between 25 and 30 is in the rearview mirror for now. Now we're between 20 and 25 over the last week. This has kind of been a support area, the 20. And if you're hitting support, maybe we're due for a spike, maybe we're not. We are down 20% in 3 days off of the highs on this, but we'll see. This is really under declining 21 is a bullish setup. but it is at the lowest that it's been for 2.5 weeks here. Let's go to bonds now. Broad bond index uh, down 0.2% today. They were mixed. If you here's the TLT, this was higher. So longer term rates down, shorter term rates up, not by a whole lot today. Bonds kind of consolidated along with stocks. Let's go to the yield here on the 10-year. Not much of a change, but up 1%. So again, this is looking like a spike low on rates last Friday, the shakeout, the panic shakeout, kind of like we had the panic gap in early March, March 2nd, and that was an island top. Let's see if this becomes an island bottom. And yes, this did confirm yesterday. The three candle morning star pattern, that's a bottoming pattern that was put in by the 10-year yield. Let's look at TYX, the 30-year long term up again. Didn't make a lower low there, as you can see, and we're making higher highs relative to the last 2 weeks on the 30-year. Precious metals now, GLD. Remember the dollar was down today. GLD up 0.82. Not at highs, but it looks like it put in a bottom yesterday, selling off after the panic kind of subsided for the banks, and now an update today. Let's go to GDX. Gold stocks up stronger, making 2-week highs. So gold led before, gold stocks are leading now. Not quite at highs, but making a higher high, which GLD did not do, up 2.5% today. We'll show silver here that was up 1%. And let's go to Bitcoin. Bitcoin up 1.7% today, kind of consolidating over the last 2 weeks. Okay, so those are the major indexes. Now let's go to the tail of the tape. You can pause it here if you want to read through the whole thing. I'll hit the highlights. A little bit of news. Consumer confidence came out at 10 o'clock. It was better than expectations. So we've got a lot of fear in the market, not as much fear in consumers. Hard to tell what's a positive and what's a negative as far as the Fed is concerned now. The Fed still wants to make sure that inflation is under control. Day count, we've gone from a week up to a 3-day consolidation day count. We undercut and reclaimed both the 8 and the 21. That's bullish. So it's our third day above the 8 and the 21 on the S&P. Expectations stay positive as long as we stay above the 21. 21 held, as I said, on the S&P. This 304 support resistance area held on the NASDAQ 100. The action tight all day and strength into the close as opposed to weakness into the close that we saw yesterday. Here are your strong and weak sectors. A couple of new focus stocks we'll take a look at. Some are in the 21. Well, one of them's in the 21 over 21. Two of them reported earnings, and one of them is showing strength. And there's a little bit of a theme here with Lulu, Elf, and Ulta. The ladies are spending money according to the way the stocks are performing. One change in the portfolio today, we added to ANET. ANET, given the first pullback in a long time, we added to the position, taking our beta from 0.89 up slightly to 0.91. Bottom line, second straight tight day, coiling for a move. Which way will it be? Tech lagging again, but you saw the hammer on the Qs and the semiconductors today. So maybe that multi-day sell-off is finished. Let's take a look at some individual names now. We'll start with ANET. That pullback, kind of harsh. The volume was high early in the day. It ended up being 25% lower. This looks like somebody, let's go to a 5-minute chart. This looks like somebody that just needed to get rid of some stock here. You can see the big volume here. Then it bounced. It sold off later in the day on lighter volume. Nice bounce off 161 to close up at 163. And it's under the ADMA for the first time since this shakeout below the ADMA on 313, sorry. We still had a 1% position. We sold a percent at 163. When it got extended here, we got back in at 164 today. So lower risk entry here for this. It still hasn't touched the 21. since going back to the first week in March. What else looked good today? Semiconductors didn't look good early, but closed at the top of their range, while AMD not at the top of the range and under the 80 MA, but the volume has really dried up the last 3 days on this pullback. I think they just went a little bit too far, too fast, and which we showed as the stocks undercut the 21 and bounced at the 50-day today. NVIDIA did close at the top of its range, undercut the 80 MA. 3 down days for NVIDIA. Note the volume on the up days. Note the lighter volume on all 3 days of the pullback. That's good to see. Now let's take a look at something that should normally impact semiconductors. Micron after hours is down 1%. Not the greatest chart, but it was up 1%. Before the conference call started and before I started doing this video. So down 1% now, not sure what they're saying. We'll see how that impacts semiconductors tomorrow. But Lulu after hours is up 12.5% above 360. So the conference call and the earnings report going well for Lulu. We'll be scouting this out as a volume gap tomorrow. And along that theme with, as I said, the ladies spending money, Elf making higher highs 3 days up after this breakout above 76. And also Ulta, 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 nice day up today, getting back to near the top of its range after a 2-day shakeout below the 50-day moving average. Nice day for Ulta today. We'll see what tomorrow brings with those names. And let's take a look at ON, our largest position. 2 down days, but they've been contained by the 5 EMA and both days on lighter volume versus the 4-day huge volume after the big gap up on its earnings report. So we'll see how that acts tomorrow too. And with that, we're going to wrap it up. So remember, it's not how much you make in the market, it's how much of that you can keep. We protect assets as job number one here at Revere, and then we participate when the market is in our favor. If you're interested in this approach, reach out to me, Don at revereasset.com, or my partner, Dan Stewart, Dan at revereasset.com, or you can phone us at 855 Real Wealth. So, wrapping up Tuesday, March 28th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.